Hi everyone, thanks a lot to be with us for this big talk from the big whale. As a media, our main goal is to bridge the gap between the crypto space, which is actually driving the financial innovation, and the traditional world without losing the core value of crypto, of course. And to talk about this today, I have the pleasure to host Mike Silagadze. How are you, Mike?
I'm great. Yeah, thanks for having me.
So you are the co-founder and the CEO of EtherFi, which is actually the biggest restaking protocol with almost almost 6 billion of total value locked. So Mike, just to start, our main goal in the big whale is to describe and to democratize DeFi, for example, for institutional player like big banks, for example. So if you have in front of you a banks or a big institutional player, how you will be able to describe EtherFi in a simple way or in 1 or 2 minutes. Let's go.
I think it's hard to do because I think crypto is so weird and esoteric, which is one of the things that we're looking to solve. I mean, at the highest level, our long-term mission is to replace banks for people. We want to create a crypto-native financial services product that people can use to save, invest, and spend their money, and never have to offer them to TradFi again. So yeah, maybe I'll just leave it at that. I think that's probably the end state.
And just before the starts, you know how you are able to define the restaking. Because when we speak about this with a Rock is one of the other co-founder. It's just described like Ethereum, like a bond, and you are able to get some reward from this bond, like for a central bank or traditional bank for this. So, are you in a same line? How is it possible to explain in a simple way the restaking?
Yeah, I think that's probably a good way to think about it. So EtherFi Stake, which is our staking product, is it's a way to put your ETH to work. That's basically the way to think about it. So in exchange for taking some risk by providing security or a bond to crypto economic networks, you get some rewards from those networks in the form of their native tokens. So that includes providing security to the Ethereum network, and then other restaking services that similarly provide some sort of crypto economic product to users.
Okay, so as you said, you want to be another bank, another kind of bank, or to replace bank to taking your world.
Yeah, crypto native version of a bank.
Crypto native of banks. So recently, you launched a card, which is a debit card. If I'm not wrong,
it's a credit card.
It's a credit card. So okay, so wow, it's a great part. So is it a huge part in your strategy with the launch of this card? So just can you describe why did you choose to launch a card? Because it's very ambitious. It's very new about the regulation, about the to a DeFi point of view. So just can you describe how it's working, and why did you choose to launch a card?
Yeah, so we have 3 products. EtherFi has 3 integrated products, and over time, we'll have more. But those 3 products are EtherFi Stake, which we talked about, EtherFi Liquid, and then EtherFi Cash. So EtherFi Stake, you can think of it a little bit like a savings account, where you're earning the native interest rate of the network. EtherFi Liquid is the analogous to an investing account where you can deploy into various DeFi strategies. And then EtherFi Cash is a spending account, and that includes a wallet and a credit card that automatically lets you either just automatically borrow against your EtherFi assets, and it's settled in crypto and stables. Or you can swap your assets directly and settle it that way. So the benefit of this is that it is in fact a crypto native credit card. You don't have to swap to fiat and move it around across a bunch of different financial institutions. It's just a simple card that you can use day to day in your normal life.
Okay, so I'm very curious. Are you linked with a traditional bank? Because you have to get your fiat somewhere.
Yeah, that's right. I mean, we have all the backend services that support this, which it includes a payment processor, a stablecoin issuer, and all kinds of other services in the background. Our goal is just to make this super easy for users. They just take their card and go and use it day to day. They don't need to, think about any of the complexities that happen in the background.
Okay, and is it possible to know more about the setup, or it's more private for right now?
Yeah, we probably don't want to talk about
Yeah.
our the various like service providers we're using for for the card yet, but like there'll be there's a lot of them.
Okay. Okay. Okay.
We'll be talking about that more later.
Okay, okay. So just, I'm very curious because as a journalist, my focus is more on the regulation and the infrastructure of the markets. So traditional and in DeFi. So it's very interesting. How the partnership with Visa came about, because it's, there is so much question going on in my mind, with, okay, you decide, because I'm a EtherFi user, I try it, of course. And I was very surprised when you launch a card. Wow, what an ambition, because there is so much about regulation around this. So my first question about this is how it's going on with Visa, for example. It's easy as a DeFi protocol to make those kind of deal. How was it?
I guess I'll say that there are enough crypto native service providers for the various things that you need, like credit card issuance, payment processing, AML, and KYC, all this kind of stuff. There's enough of those out there that it really just becomes a matter of kind of wiring them together and building the product. So I think if we were doing this even a year or two ago, it would have been very different. We'd need to like build each of these components ourselves, which would mean it would just take a lot longer and be a lot more difficult. But thankfully, we're able to rely on a bunch of like companies that are playing these roles in the ecosystem.
And what has been your reflection about the thinking about this, eventually the problem regarding the regulation?
Well, what specifically? What? Because there's so much there. What specifically?
So, for example, the crypto, the fiat crypto, the taxes, for example, how it's working. For me, I'm going to take my example. I'm on the list to receive the cards. And if I'm spending some crypto, no, it's okay. I'm spending some crypto. How it's working. It is my taxes is like some French taxes. How it's going on about this?
Okay, that's a good question. So if you are in a complex tax jurisdiction, I shouldn't be giving tax advice, but like if you're in a complex tax jurisdiction like France or others, where you have to worry about things like realized gains or losses and things like that, then the easiest way to set it up is to just have it automatically borrow against your assets. So if you have whatever, you have 10 ETH in EtherFi, then as you're spending the card, it just borrows your assets. It borrows dollars against your position, and then if you have stables or cryptos that at some point you do want to sell, then you can just pay that off whenever it works for you. And so it gives you like a little bit more control, so that you're not having to deal with the complexity of every single time you buy a latte, you have to figure out, okay, what was your realized gain on that specific transaction, and so on. So we'll obviously provide all the normal like reporting about like every transaction you executed, and then you can kind of do with that as you please. But it is up to the user to figure out what they need to do with their taxes on the card. I mean, all we can do is provide the reporting. We're not going to do the complexity of taxes in your particular jurisdiction.
Okay, and since when is it in your mind, this card? Is it just in the beginning? What? Okay, I'm going to rephrase the question. What is your entire vision about this?
Yeah, I mean, look, in the end, the longer term vision is to have a crypto native payments network. So in other words, we want to give the option. So like with like Visa is great, MasterCard, they're great, right? They actually work really well. Like it's kind of crazy that you can just take a special number or a piece of plastic or metal with you anywhere in the world basically and just buy stuff. Like that's actually kind of amazing. So it is great, but if you actually look into the mechanics of every credit card transaction, the and there's like 7 different companies involved in every transaction, various intermediaries,
Yeah.
and probably 3 to 5%, maybe more, of every transaction ends up going to those intermediaries. So every time you spend, $100, $5 is going somewhere between Visa, the bank, the issuer, the payment processor, and so on. And 2 to 3% of that comes from the merchant. So but what does that mean? It just means everything is 2 to 3% more expensive, right? Because the merchant, they can't manufacture money. So if they're paying 3 to 5% on top of everything, then they're just going to raise their prices by 3 to 5%. So you're effectively paying for it indirectly. And then you, in fact, are paying fees. It's not obvious that you're paying them, but but you're paying usually depending on the card, you may have an annual fee.
Yes.
It can come out to a lot. You have FX rates. You have, if you withdraw money from the card, you've got obviously the interest rate. There's a million little payments that maybe you don't even notice, but they actually add up. And the credit card, believe me, does the company does the math on figuring out, okay, what is their net interest earnings on on every transaction. And if you do the math, again, it depends what it is, but 3 to 5% of every dollar that's spent goes to these intermediaries, which is a lot, 3 to 5%. Tax on every single thing because pretty much credit cards have replaced all cash now. So it's a pretty substantial thing. So with a crypto native payments network, you can really reduce that. I mean, you could bring it very close to zero. The gas fees on any given transactions, especially with now how easy it is to launch, rollups and layer 2s. Gas fees can be, a fraction of a penny, a fraction of a penny per transaction. There's really no need to charge per thing. FX rates pretty much don't exist anymore. You can really reduce the cost down to probably way less than 1%. And that's huge. If you think about a business,
it's just the beginning, maybe. This is just the beginning,
Yeah, exactly. If you're a restaurant, getting another 3 to 5% margin is you've doubled your take home now. It's huge. So starting with Visa, but in the end we want a crypto native payments network, and beyond that, we're going to continue to flush out the full suite of services that people are used to from their financial institutions. We want to have people be able to fully have a self-custodial, financial services experience where everything they do is natively in crypto. You never have it to, to plug into TradFi, which of course makes you a lot more mobile. It makes it basically impossible or very difficult for the state to confiscate your assets or inflate away your assets, depending on what assets you're holding. It gives you a lot more power as an individual. So that's ultimately what we're
interesting.
We're trying to do.
Yeah, interesting. According to your experience about this product, about the card, where we are about the adoption, the democratization with the big traditional player, according to your experience, about the card, are we far, and what is the knowledge about the DeFi?
In some ways, there's a few killer apps in crypto that are widely used. The main 2 ones are gambling. That's probably the main use case of crypto, and then stable coins. So those are the 2 big use cases of crypto. If you look at stable coins, especially in South America and a few regions, the penetration is significant. 30% of people in I don't know how accurate or how recent the stat is, but last I read, it was something like 30% of folks in South America are using stablecoins as their sort of primary way to transact and protect their wealth. Right? They get their garbage local currency, they immediately swap it for USDT, and then they store that to protect themselves from inflation, which I think is great. So anyway, so those are the primary use cases, and those use cases are depending on the regions, are quite widespread. I mean, when it comes to gambling, like, I don't know what the number is. I think it's like, similarly, I think about 30% of Americans own crypto. But like, what are they doing with it? I mean, they're gambling with it. They're not using it in their day-to-day life. They're speculating on Bitcoin, on Ether, on whatever, meme coins.
Yeah,
So in
investing.
that sense, it's
Investing.
yeah. Well, I mean,
No, I
yeah.
know what you mean. I know what you mean.
Yeah, I don't think it qualifies as investing. They're speculating. Um, so, uh, so that's okay. That use case is quite widespread. Stablecoins are fairly widespread. Obviously, they could still 10x globally pretty easily, but it's quite widespread. Gambling, very widespread, pretty much all over the world. But like the real use cases that I actually care about, well, stablecoins I care about. I think that's useful.
Yes.
But like the real use cases where there are products that you can use in your day-to-day life, whether it's transacting or saving or investing or issuing new financial instruments, that is like, I mean, we're in the infancy of that. And I think one of the reasons for that is because crypto is such a fertile ground for gambling and speculation, it ends up crowding out the real use cases. Like it's just, it's a real source of frustration for me, because it's just like really you have all these founders and so many are effectively like running unregistered casinos. You've like lots of different variations and epicycles around them, but like in the end, that's basically what they're doing. And that's frustrating because I genuinely think crypto can be a real leveler and enabler, and that's what I think we're doing. I mean, that's what we're trying to do, at least, is create real products that people will use for real in their day-to-day life. Like I think a payments mechanism is like a real product that people need, especially if it cuts out 5% of fees in every transaction, among other things. And so that's what I'm interested in, and that is like quite early.
How many users do you have currently? Do you know the number?
It's so hard to measure. Probably two. It depends. Yeah, depends on how you measure it. Probably about 200,000. I think that's probably the number.
Okay, that's a really huge and good start interesting.
For crypto, yeah. I mean, it's a tiny number, right? But for crypto, it's a very special user base. I guess that's like it's a highly financialized, very sophisticated, extremely high net worth user base. If you look at our customer, like relative to like let's say an average bank and like what their average customer looks like, ours are like on the extreme end of again sophistication and wealth. So that 200,000 is a very, very valuable user base, but it is still quite a small user base.
Yeah. One of the reasons is user experience. How do you want to improve it if you have to, of course, and where we are overall in the crypto space about this? We are in really beginning, really early, or it's.
I mean, I think user experience and it comes from utility. Like, if your utility is, it really just depends on what you're trying to accomplish. So, for somebody who knows how to use, MetaMask or Rabby or whatever, who knows how to use like crypto wallets and understand seed phrases and transactions and approvals and tokens and all of that nonsense, like. Our user experience is fine. It's good. If you have all of that context, it's great. Like it works. It's really nice and simple. But for a normal person, if you just try to take a person off the street who's not a crypto lunatic, it's incomprehensible. It's completely incomprehensible. But again, that comes from utility because they have nothing to do in something like EtherFi. Like a normal person on the street, you ask them like, okay, what, how much savings do you have? Or like, what do you actually want to do? Like they go to EtherFi and say, well, this doesn't solve any of my problems. Like we solve lots of problems for like very financially oriented crypto native people, but like we don't really solve right now problems for a normal person. But that will change with the cash product. That is, it's much more aimed at like a normal, person. And so I think that should hopefully expand our audience and user base. Once we start integrating things like payroll and payments that go beyond just like things that you could pay with your credit card, like being able to pay your mortgage or your car payments or loans and things like that. That starts getting like that really now starts getting to normal people, and you can offer them something that they wouldn't be able to get, from a traditional financial services standpoint.
And are you in touch with some banks, traditional banks, about this?
No,
not really.
No, I mean, we have banks that we work with and issuers and whatnot, but no, we're not. That I mean, I think you almost these two worlds are, I guess, TradFi and DeFi or crypto. It's hard to mix them because it's just you end up with something that ends up not being a great product. So yeah, I think this is a realization I had a while ago. It's like you really need to go crypto native. That's the only way you're actually going to have utility and a good user experience. If you ever try to like bridge between them, you just end up like losing the benefits of both, and then it just you end up with not a great product.
Okay, interesting. Okay, so that's a perfect transition because I want to talk about the like a pivotal moment for the DeFi ecosystem, and the institutionalization is coming very fast. And to my point of view, the objective of a DeFi protocol like you is now to generate enough revenue or cash, which to develop and to anticipate the inevitable regulation of DeFi. One day that's gonna come. So you have to have some cash when it's gonna happen and good product to propose. So where we are about this, and is it your strategy? Is it in your mind this way of thinking about the regulation and to continue to grow the product?
I mean, we think about regulation insofar as we want to be compliant. I mean, it's so nebulous right now. It's kind of hard to know what you're supposed to do, but
it's not always the case. For some players, it's not always the case. So that's why I'm asking the question. So
no, we spend stupid amounts of money on lawyers and across different jurisdictions and for different purposes. Like, we're doing our best to stay compliant. I mean, it's, as I said, the regulators have done a shitty job of like making that easy. But we don't think of it as like we need to have lots of cash so that we can have money for a big fight or whatever. We're generating lots of revenue. I mean, our revenue run rate is like $35 million now, which for a 1-year-old company and 15 people is like pretty great. So we're nicely profitable every month. We're bringing cash onto the balance sheet, and the labs company specifically. And we can plan to continue to do that. And I do think the cash product will be a very, very profitable product. And so I think we'll continue to focus that. And we've got a great balance sheet. I mean, we've got tons of money on the balance sheet from the fundraise that we did in our Series A. And again, because we're not actually spending that money, we're accumulating. We have lots of resources to do anything we need to do.
Okay, there is another vault on the pipe, because you have your vault, your liquid, and your stablecoin vault. So for our viewers, there is some another product like this on the pipe, and it's coming very soon, or we have to wait some more months or year about this?
No, we're going to be launching lots of vaults. One of the vaults that we launched recently was we just launched our Symbiotic LRT vault. Which is really cool. Symbiotic is like another restaking player that's taking a slightly different approach than Eigenlayer, and we're excited to see how that goes and to support it. So that's one vault that we just launched. We were planning to launch a Bitcoin vault.
Okay.
I mean, we're going to do that soon. It's just a question of bandwidth. And then we'll probably be launching other LRT vaults. Like, we're looking at, here's some alpha for you. We're looking at doing a Carrick vault. We originally, anyway, we're looking at doing it. I'll just leave it at that.
Okay. And that's for about the Bitcoin. That's going to be a wrap Bitcoin or real Bitcoin?
Yes. Well, no, it's wrap Bitcoin. Obviously, there's no way. It's an Ethereum product, so we are looking at some of the Bitcoin, and this is very loose terminology to call them Bitcoin LSTs, like Bitcoin staking products. Like for example, there's Babylon that's going to be launching, and there's a few folks that are building,
Yes.
staked Bitcoin products. So we're going to be, integrating that and others.
Okay, interesting. What's by the way, we're gonna go just a little bit outside with this question, but what's your view about Bitcoin? Because most of the time when we talk about some DeFi, especially on the EVM ecosystem, they are not really fan of Bitcoin. So what's your view about Bitcoin?
Uh,
It's hard to say.
Yeah, I think that's probably fair. It would be accurate to say that I'm not a big fan of Bitcoin. I think, obviously Bitcoin is like, it's the original. It has a lot of history, and I think they've done a good job of like ossifying their protocol and governance, and like making it truly decentralized. So I think that, we owe kind of a debt. But I think the issue with the Bitcoin community is the Bitcoin community is like there's a lot of crazy people there, who, I mean, I don't know. I could say a lot of things about it, but I'm not a big fan of the Bitcoin community. I think the project ossified too soon.
Okay.
It's kind of like you want to ossify when the thing is mature and like you've really had some time to kind of to develop it. And I think Bitcoin ossified too soon, and so now they're stuck with proof of work, which I think is a maybe somewhat controversial opinion, but I think it's a dead end technology. I think it's proof of stake is better in most ways. And then obviously like they've got this very weird sort of structure that they've like gotten themselves into where you really can't build anything on it in any meaningful way, or it's extremely difficult to like build anything on Bitcoin. And so it's like, it's
frustrating.
Yeah. It's kind of like, as I said, it's almost like a technological dead end. And like, are they ever gonna, are they ever gonna be able to get out from under that? Because any version of DeFi or like extensions of Bitcoin end up being like much worse versions of anything that's available on like Ethereum or Solana or whatever. Like you just end up having much worse products, and so then you really are just left with the basic use case of Bitcoin as like this sort of like pet rock type asset. And like I just like, is that really that valuable in a world where it's like trivial to create an asset with a fixed supply, right? Like it's now that DeFi is quite widespread, it's not hard to do that. So what is the real value other than just the fact that it's the original meme coin? So I'm not super bullish on Bitcoin
Okay.
in the long term. I think I generally have a bias like for in favor of productive assets that you can actually build stuff with. So I think I probably alienated a lot of people, but like I'm not that bullish on Bitcoin long term.
No, it's okay. Thank you to be so honest on this, because it's almost never easy to talk about this in this so honestly way. So thank you. And let's go back to the institutional side. There is not already some staking in the ETF, spot Ethereum, that's going to be under trading for soon, really soon, in a couple of weeks or day. It depends. Are you in touch, with some asset manager or some provider to doing something with the staking? Because I'm asking the question because when I just talked with Rock once again, he told me about this. You are waiting, or you are looking for or waiting to help or to propose something, some product about this. So what's your ambition on this about the staking, the ETF spot Ethereum in United States, of course?
I think it'll happen for sure. I think there's going to be a staked ETF at some point. It'll be, initially some walled garden with like OFAC compliant validators that are censoring and doing all kinds of stuff. Like that's obviously, what it's going to turn into. And maybe that's fine as a starting point. But like if you think about already like what's happening like on chain,
Mm-hmm.
the amount of activity, the amount of deposits and scale, even just EtherFi, which is now where I think almost 7 billion, depending on the day and the price of ETH, 6.5 to 7 billion in deposits. Like that's pretty large. Like that's as large as like some of the largest ETFs. So I really think we're actually getting to a point where like the ETFs, maybe not today, maybe not even in 2 or 3 years, but like in 5 years and 10 years, I don't think the ETFs and TradFi and stuff will matter. I think the default will be new financial instruments, new assets, new businesses that want to go public are just going to default to crypto. Like that's going to be the default. The old school, go public on the NASDAQ or New York Stock Exchange is very quickly going to become a legacy thing because it's just so much more advantageous to do it natively on the various crypto infrastructure that's been built out.
Okay. So I'm asking the question because according to our information, there is so much, contact initial from actor like Lido, for example. They are talking with so many lawyers, so traditional player to improve the product because for right now, traditional asset manager. Yeah.
Yeah, I mean, there's tons of people that are using Lido and EtherFi that are, you could loosely say, are institutional. But it's still very much in like the venture discretionary kind of like bucket. It's not like the main, in the main asset class thing. I don't know. I mean, I don't know how you ever get to like you what the product needs to look like to be usable in like an ETF. Staked ETF is like very much a neutered product. Like it's going to have like 2% yield, or 2% reward rate on staking. I guess that's better than nothing, but like it's I don't know that that's going to actually be that attractive for people compared to like anybody who is even like a little bit sophisticated when they're comparing, okay, like an EtherFi versus an ETF that's paying them 2%. We're not really competing for the same customers. Like it's a completely different user base. And as I said, I think the user base on our side is growing. Like that's where people are migrating to. Zero users of EtherFi are going to say, forget that. I'm going to go to like an ETF that has 2% yield from staking. Like no one is migrating the other direction. And like the DeFi universe is growing probably, 5 or 10% a month. Like it actually is not even going to take that long until it becomes like the norm and the dominant way to launch new assets. So I think it's one of these things that looks from the outside like change is slow, and it'll be slow until it's fast, and then all of a sudden you'll look around and just like everything is just natively on crypto rails, and that's going to create a very very different universe. I think it'll create a universe where regulators and governments just have a lot less control. They have a lot less control over what people can do. In the same way that information used to be much more controlled, right? Like you could control the printing press, you could control newspapers. There were a few outlets through which people got information, right? There were like 3 TV stations, maybe, and radio and news. And you could just control it.
You can control the algorithm too, for example.
Well, even I'm talking before algorithms, like even in the 20th century and the 18th, 19th century, governments had a lot of control over information. Like they could, that they had the ability to ensure that there was like a very clear kind of party line. And then that with the internet, that's changed. Like even in China, like it's pretty trivial for people to get information from all over the world. Like we can complain about, social media companies and how they're censoring and directing stuff. But the bottom line is you really can't control it. If somebody wants to read what a person in China wants to read something that an American author is writing, they can do that. So I think in the same way, governments and regulators are going to have to get used to an environment where they similarly don't have that control over financial instruments, over money. Like you won't be able to control money moving across borders. Like it'll just it'll be a sort of unstoppable. And that's going to take decades, I think, to really normalize. It's going to have all kinds of far-reaching implications in terms of what governments are now able to or not able to do. But I think that's going to be powerful. I think that's going to be great. It'll allow. I think it'll prevent governments from being able to do some of the things that many of us don't like them doing.
And that's going to be a long journey too. It's very interesting to go back maybe to your background, because to my point of view, you are very organized. You have a roadmap in mind. So my question is, and you are very long term. If you are following the EtherFi, we can talk about your very successful airdrop, from the season 1, for example. But I want to go back to your background first. Where are you from, and why did you jump to crypto, Mike?
So I've been doing things in crypto since almost the very beginning. I mean, I bought my first Bitcoin back in 2011. Okay. I read the white paper very early on, got excited about it for all the reasons that I talk about now. I think the idea of a truly kind of self-custodial, monetary system is really, quite revolutionary. So I got excited about that very early on. What made me ultimately decide to move from it just being a hobby on the side to something that I focused on full time was when DeFi really started to emerge. So specifically when products started to get built in crypto, when it wasn't just people speculating on this token or that token, when it really became about actually building products that were productive assets that had utility. That to me was the inspiration to really say, okay, now the market is now ready for people like myself who like to build products, who like to solve problems for people, to be able to enter the space and focus on it full time. And so previously, I started and ran a software company in education technology, and so then I exited that and decided to focus on EtherFi, and that was about. The start of that was 2021, and that eventually became EtherFi around 2023.
Okay, very interesting. And we're going to talk about your airdrop, because there is so much bad thing going on about airdrop, but in the season 1 have been a success. We can say that. I really appreciate it. So no, really, that's how do you explain that, and what is a good receipt for a successful airdrop? According to your
yeah, I mean, I think probably one of the biggest things that we did that I think helped us be successful is being able to iterate. So in other words, we took a lot of user feedback and incorporated it, ran a few iteration cycles, and then did the airdrop. And obviously I talked to lots of folks who did airdrops prior to us, and got a pretty good feel of what worked and what didn't work. And so I really think it's that like user-focused iterative approach is what ultimately made us successful. I mean, I can talk about some of the specific things that we did, like a minimum amount for every user. I think that especially for a season 1, that was important. I can talk about what we did in terms of like the payout structure, and making it for the most part linear above that minimal threshold. But in the end, like really what it comes down to is just listening to users and getting feedback and trying to, and being pretty generous with it, not trying to not trying to like optimize for how much the foundation retains, but just getting lots of supply out there into the hands of real users.
And regarding that, it has been easy with VC, for example, to explain that and to give your conception about this airdrop. How did you manage this?
Sorry, what do you mean?
I mean, most of the time there is so much going on with VC. There is some bad things, with big valuation out of.
You mean investors, like venture?
Yeah, venture.
Oh, okay, yeah. Honestly, RVCs were not at all involved in the airdrop. Like I don't think we even like told them what we were going to do.
Okay.
So they in fact, many of our early investors, we initially told them that we're not doing a token. You know,
Okay.
we had a point system, and we really were saying, okay, no, it's just a point system. We're not doing a token. At some point, obviously, we changed our mind and decided to do
Okay.
a token, but no, that was like an internal thing. We didn't, we didn't. Our investors weren't involved in that aspect of it.
Okay. And what did you choose to launch a token? You know?
I mean, there are lots of reasons.
But the
It's
main
just a
reason.
competitive advantage, I guess. That's probably like having a utility token that the foundation can then use for partnerships, incentives, for like voting, for all kinds of stuff. Like it's a big competitive advantage. Like that's you know it's also a good way to get community buy-in. Like when you have hundreds of thousands of people, I think at least that hold your token, that are aware of what you're doing. It just ends up being a big advantage. And it's a good way to rally a community around the project that you're building. So yeah, that's there's probably other reasons, but that's a big one.
Okay. And you just described the parameters of the season one. That's going to be the same compared to the season two or not? What?
No, we've said multiple times that season 2 is going to be very like straight linear. We're not going to do
Okay.
any weird like minimums or the advantage of that is you also don't need to worry about like Sybil attacks or like any other complexity. It's just like super simple. It's just like a linear airdrop, no funny business. So yeah, that's honestly that's the difference in season 1 versus season 2. Season 2 is much simpler.
Okay. Of course, can we find out more about the claim date of the season two? What is your strategy after?
What we've publicly said is that season 2 ends June 30th. So
Yes.
that's that's pretty much gives you a good idea of what's going
Okay.
to happen.
Okay. And what's your strategy after to continue to onboard user after the all the airdrop? So there is the season one, season two, season three, and after what's your plan to continue to attract users
Um,
or not because you
well,
will have enough users. So
no, I mean, I think the benefit of having multiple products out there is that now, and those products have utility, like staking, deploying capital, spending. That is what attracts users, is that you give them a lot of utility that they otherwise wouldn't be able to get. And then, of course, we're doing partnerships with lots of protocols that allow us to sort of pass on points and things like that to our users. So that there'll be lots of ways to pass on incentives for customers. But like in the end, it has to come from core kind of utility. And we are, we're getting there. I think we've been able to. We've done a pretty good job of like bootstrapping it to where we are, and then transitioning over.
and about your tokens, your ETHFI, so your native token, when holder will be able to be rewarded to hold it, it's soon
Oh,
or
like
not?
staking ETHFI?
For example, or just to be rewarded to hold the token like a security. It's a big word to say, but
We haven't decided to do that yet. I mean,
okay.
we haven't decided to use our token as for those types of things yet. What we have just recently announced is our first governance proposal, which is a buy and LP proposal. So we're using a portion of protocol revenue to buy the token and then lock it and LP it.
Okay.
And so that over time obviously brings back benefits to token holders, because it's it's starting at around, assuming it passes, which it looks like it's going to pass. So assuming that governance process goes through as expected, that's starting at around 150K a month, which is small. But like as the protocol grows, that will probably turn into millions and millions of dollars a month. of effectively bringing value to the token. But there are other things we're looking at as far as potentially like some staking requirement for node operators. That's something that we thought
Okay.
about. Potentially some, there's a few other areas of utility that we're looking at.
Oh, interesting. And about your strategy to reward from the restaking, so that's your core business.
Yeah.
There is some protocol. They are not conservatives. We can say that. So what's your strategy? What's your view about the way to restack and to reward according to the risk?
Yeah, so we're going to be working with Chaos Labs. I think
Mm.
we've announced that, and they will be our risk partner. So they'll be evaluating every restaking service that we're considering restaking into, and then assuming it sort of passes that risk framework for every restaking service that we onboard, it'll be put to a governance vote. So we'll have a community vote on, all right, do we want to onboard, Lagrange, whatever, as a restaking service? And then, in combination with Chaos Labs and whatever parameter sets are defined, I guess, in the, community vote, we'll be able to provide some ETH security in exchange for some rewards for our users. So there'll be like a well-defined governance process around all that.
Okay, interesting. Thank you, Mike, for your time. I have one last question. So you're in the industry since a long time ago. So if you have to say something on this about the long journey is going on, how you will be able to describe what's happened and where the industry is going, because you are since almost the beginning, maybe.
Sorry. So you're saying just what's on the horizon? What are we going to be focused on, or
what? No, you
or the industry as a whole?
Personally, what's your view or the long span? The time spent since 2011, since you're involved in this industry.
Sorry, I just want to make sure you're asking like about the retroactive view, like how it's evolved. Is that what you're asking about?
Exactly. Yes.
I mean, I think it's ended up being so much more interesting even than I thought. I think the initial view that people had in the early days, even people that were excited about the Bitcoin white paper, which talked about some of the more exotic applications of crypto. I mean, I've been pretty amazed and surprised at just how much more interesting things have turned out. Like all the different things that people have been able to build on, on crypto, and everything that's still possible, beyond that. So I think that that's been remarkable to watch, and it makes me more optimistic for the future that there's even more, that's possible. I mean, some of the things that are happening with lots of people are using different language for it, but like the network state, I think crypto has the ability to even create a new abstraction layer over top of traditional kind of nation states, which I think is very interesting and powerful and and profound.
No, interesting. One more question. What's your view about what is going on Ethereum? With the restaking, because it's very interesting. For example, there is a rollup, there is L2, so there is a big infrastructure is able to carry a value about messages and money. So it's going to be an entire infrastructure, not only for the financial services. So what's your regard, is your view about this?
Restaking specifically?
Yes.
Yeah. I mean, I guess I'll say I'll say kind of the opposite. Where like I think it's going to take years to really like develop into something. There's so much potential and excitement about what it can do, but if you look at like what is it today, it's not really doing very much, right? There's really no. I don't think there's a single restaking service that's actually active. So, and these are very complicated products, like the things that people are building on restaking, like they're quite nuanced and complex, and there's a million different things you can do, and it's going to take a lot of time for these products to develop and get customers and people paying money for them, and so I think it's going to take time. It's going to take years. So I think there's, as I said, there's a lot of excitement for the future, but it's going to take a lot of time for reality to catch up.
Okay. Thank you, Mike, for your time. Almost 1 hour together. So, by the way, we're going to publish some analysis because in the big whale, we are focused about one topic, each week. So, for example, this one is going to be dedicated to the restaking. So, for example, that's going to be very interesting to have you in the interview. So, you can follow this this week on the big whale. And I see you for you another big talk, of course. So many good players to interview. So thank you to all of you. Thank you for you, Mike, to be with us in the big whale. And I wish you a very good journey, a long journey as you described, and good luck for the following purpose you want to reach.
Great, I appreciate it. Thank you for having me.